Ladies and gents, welcome to the very first video of the so-called price action course. I'm kind of excited, or actually very stoked, to share all this information that I can possibly share with you guys. And hopefully after having consumed the entire price action course, this is going to spark some fire within you. Okay, so first of all, welcome to the trading journey. Mentally prepare yourself because it's going to be somewhat comprehensive. It's also going to be somewhat technical, and a lot of jargon terms will be applied as well, which you probably haven't heard before. So in order to keep up with the pace, I would actually highly advise you guys to go to the very first introduction video, the one that you have seen prior to this one. Go to the description and you will be able to find yourself a so-called price action course document. Download this. You can put this document next to the price action course. So whenever the pace is a little bit too fast, whenever you don't understand specific terms or concepts, you can just pretty much refer to the so-called price action course document. Buckle up, fasten your seatbelts, and we are just going to kickstart with what price action is in general. So let's just go. First of all, the website that I'm currently using is called TradingView. And TradingView is pretty much the holy grail for all people that are interested in investing, trading, and especially for people that also perform or make a technical analysis on a specific asset, different markets, or whatever. Okay, TradingView is pretty much the place to be whenever you want to make or perform a technical analysis, which you can hopefully eventually translate to a specific trading setup. When it comes to price action itself, it's very simple. Everything that you see here is related to price action. Price action is literally just watching how the price moves of a specific asset. And instead of using all sorts of complicated indicators, for example, RSI, MACD, Bollinger Bands, you just keep it very simple. You make use of horizontal lines. So for example, this is a horizontal line, and you make use of a so-called box. Of course, we will elaborate later, but less is more. And this is a very effective and a proven method, which eventually allows you to be profitable if you do stuff correctly. When it comes to price action itself, it's relatively straightforward. I don't want to overcomplicate it. It's pretty much just looking at all the movements of the price of a specific asset. And in this case, all the information that we see, the blocks, the candlesticks, the bars, is all related to Bitcoin. You can see it on the top left. This is the symbol. So whether the block or the candlestick has a green color, a red color, whether we are in an uptrend where price goes from lower to higher, or in a downtrend where price goes from higher to lower, or we are ranging, so basically price is just hovering between two specific levels from point A to point B. This is all price action. Okay, so this is the essence of price action, and you need to understand as well, whenever you understand, for example, in which type of trend we are, that's really where the magic is going to happen. So I already mentioned it very briefly, but I will just give you guys a better explanation. We have three different trends. There are different phases in the markets. Okay, so again, the very first one is going to be a so-called downtrend, where price tends to hover or go from higher prices all the way to lower prices. Okay, and this can potentially be caused by market circumstances, wars, other news events that has a negative impact in the market. Pretty much all the macroeconomics definitely can play a role here. Okay, but this is a so-called downtrend. Again, the price goes from higher to lower. So this is the first one. Okay, but then again, if price can go from higher to lower, then it can also be the other way around, vice versa. So this is the second trend, where price goes from lower to higher. Okay, and then again, of course, also this is based or pretty much dependent on the market circumstances. Maybe Trump made some good decisions, made a crazy speech, maybe election based, and that also causes, of course, the markets to flourish and to go up in prices. Okay, and that is being reflected in higher prices. So this is an uptrend where price goes from lower to higher. And then again, the last phase, this is something that I briefly shared with you guys as well. This is the third one. This is what I consider to be a sideways range. Okay, sideways, where it usually tends to hover or ping pong between two different levels. And for example, this is level A and this is level B, for example. And then you can also obviously understand that The upper part is functioning as a so-called resistance level. So whenever price tends to go to the resistance, it's getting rejected and then it slows down and it goes back to lower prices. However, at the bottom, we have a so-called support zone, area of interest, where price tends to go up. Okay, so these are the three different phases. Sideways, price is hovering between two levels, pretty much ping-ponging, ping-pong. Okay, so on a very high level, these are the three main trends. However, as a trader, it's very important to recognize these trends, especially when we are going to apply the theory into practicality, because one of the main characteristics or skill sets that is required for a trader to be successful is to be flexible and adaptive when it comes to the market circumstances. Even though price action is a proven system, it's a proven framework and it works, you do need to understand that your approach needs to differ whether you're going in a downtrend or whether you're in an uptrend. Okay, you need to be flexible. So the approach needs to be changed every now and then, and that's just a fact, because the market circumstances can always differ from time to time. However, if we are going to apply the three different markets into the practicality, and again, this is Bitcoin, let's just start with the left. It's very simple to understand, even though, you know, it's all new for you guys. You can clearly see, without putting too much thoughts into this, that when we focus on this point to this point, price was obviously in an uptrend. And then of course, eventually, as you can see here, where I currently draw this circle, we peaked, Bitcoin peaked around 67, 68K, previous all-time highs. And then from that point all the way to, let's say, November 2022, we were in a downtrend. And that's very crucial and very important to understand as a trader, whether you're in an uptrend, whether you're in a downtrend, or sideways ranging. So then eventually we bottomed out here, price tends to go up. Again, we are in an uptrend. And this is actually a very beautiful example of a sideways range, where price eventually tends to ping pong between two particular levels until you eventually break out, whether it goes to the upside or to the downside. But that's a very beautiful example of sideways price action. And maybe if I go to the daily, because we were initially looking at the weekly, now we are actually going into a little bit more detail. This is also a very beautiful example of sideways price action. As you can see, price goes to the top, you find support, you go back up, support, and then eventually you break down all the way to lower. So you do need to understand that as a trader, not only do you need to be flexible and adaptive, as a trader, our main goal is to pretty much gather all the necessary information, all the key info, all the puzzle pieces in order to make well-informed decisions. Because when it comes to trading itself, and this is something you might have heard in the past, trading is actually a probability game. And unfortunately, this is not something that I can guarantee, nor anybody else or anyone else. We never work with 100% certainties or guarantees. To a certain extent, you will always remain with the speculation, okay? You will always keep on speculating to a certain extent. So in the essence, and that's where people usually say like, hey, trading is gambling. Okay, if you don't know what you're doing and you're just clicking on random buttons, whatever, without really putting too much thoughts into this, of course, you do need to understand that whatever you do, it has a 50-50 chance. It has a 50-50 probability. And this, in its essence, is obviously gambling related. However, if you understand the price action, if you understand the trend, if you understand liquidity, this is something that, of course, we will discuss in the course of the price action course, and many other elements. Hopefully you do understand that you can change this 50-50 scenario to a potential, let's say 70-30, or perhaps an 80-20 probability. And this, on the longer term, is pretty much where our edge comes from. And by being consistent with your decision-making skills, and of course, this comes from having a system, having a checklist, knowing what to do, knowing what to look at, knowing how to take an actual setup, etc. That's where the edge comes from. And when you're consistent with your decision-making skills, that's just a very simple equation that will eventually lead to getting more W's, getting a higher hit rate, okay? And that eventually, if we take these trades, this will give us more W's, more W trades, a higher hit rate. I would just call it HR for a quick second. And this eventually will cause you to be consistently profitable. And the money itself will always be the byproduct of whatever you do in the trading game. So that's the first part of price action. Let's go with the next one.